Why do Americans, by a pretty large margin, think that real estate is the best long-term investment? What can home sellers control in this chaotic market, and how can they optimize their sale price? Why is Airbnb becoming a party pooper and canceling party reservations? We'll cover all this on today's episode of On the Market. Hey, and welcome to On the Market. I'm your host, Dave Meyer, and today we have our patented, it's not actually patented, it's just our common headline show. And for those of you who haven't listened to it, we basically just pull 4 articles from the news cycle that are relevant to real estate investors and people who are involved in the real estate investing industry, and we discuss how our audience should consider thinking about them. And today we have some juicy headlines. We're going to be talking about, first and foremost, why Americans think real estate is the best long-term investment, but some experts disagree with them. Second, we'll talk about what's going on with home prices. Third, ways in which sellers can control and optimize their home sale in this market. And lastly, we're going to be covering a new AI technology that Airbnb is using to kill parties. And we have some updates on previous headlines. Before we bring on the panel, and Kathy, James, and Henry are all here with us today, but before we bring them on, I just wanted to let you guys know that I recently released a brand new, entirely free webinar for anyone who is new to real estate investing and wants to consider investing in this market. It's about 30, 40 minutes, completely free. If you just want some tips on how to get into this market, check it out at biggerpockets.com/newbie webinar. And if you see some of the tools that I'm using in this webinar and you want access to them, you can become a Bigger Pockets Pro member. If you've never heard of the Pro membership, it's basically a one-stop shop to help you build and scale your portfolio. We have all sorts of tools, exclusive networking opportunities, exclusive education opportunities, and you can get all of that by being a Pro member. And again, if you want a discount on Pro, just use the code NEWMARKET24 for 20% off the Pro membership. And with that, let's bring on our panel and discuss today's headlines. Welcome to my esteemed panel, James Daynard, Henry Washington, Kathy Fettke. I feel like it's been a while since we've all been here. It's good to see you all.
It's good to catch up with you guys.
All right, so for our first headline today, it comes from NBC, and it says that 36% of Americans say real estate is the best long-term investment. And just for reference, that kind of blows all the other answers out of the water. So real estate came in at 36%, by far the number one option here, followed by stocks, which came at 22%, gold at 18%, savings accounts and CDs at 13%, and then bonds really get no love at 4%, cryptocurrency even less love at just 3%. So Americans, despite, the other headlines we talk about on the show where everyone thinks it's a terrible time to buy real estate, still think real estate is the best long-term investment. Kathy, what do you make of this? I assume you agree here?
Well, I always think it's funny when people do the comparison of the S&P versus real estate because they're looking at the entire asset as if you paid cash. At least that's the way I read it. And who pays cash? Not very many people. So if you really just took the amount of money that you put in the deal, which for people like Henry and James is zero by the time that they refinance and get all their money back out, it's infinite returns. It's a totally different graph that you would see if it was just the amount of money you put in real estate and how that has grown. So I just never listen to those. I don't look at those charts because to me, they're just, you'd have to take a group of people who either own their properties all cash or bought with all cash to be able to make that argument.
Yeah, I think this is such an important point because if you actually do look at these charts where you consider unleveraged real estate, so all cash deals, and you do compare it to the stock market, honestly, I probably wouldn't buy that if it were me. They're actually kind of comparable in terms of returns often, but real estate is obviously more work. So if you're going to do unlevered real estate, it's not as good an investment as the stock market, at least for me, if you're considering both the financial return and the amount of time that you have to invest in it. Now, James, I know you're famously just all real estate. So have you even heard of stocks or gold or any of these other asset classes?
I mean, who doesn't want some gold?
You got some on your wrist right now. It looks pretty nice.
It does, actually. I had a brief run in the stock market. It was during the pandemic, and I downloaded an app, and I call it betting, because that's exactly what I was doing. I was just buying and selling stocks because the market had deflated. I was making some money, gave me false confidence, and then I got creamed massively by shorting Tesla. And I learned my lesson that I'm sticking with brick and mortar housing. No matter what, as an investor, you got to pick what you like. And some people love stocks. They're really good at it. They're growing. They don't want to have to manage a rental property or manage real estate. And I understand that too, because being a landlord can be a headache. But as far as a smarter investment or a better investment, I just can't agree with it. And the reason being is in real estate, you can be so much more versatile, in my opinion. You can create your own profit by putting the right plan on it. You can lever it the way you want to lever it and leave very little money in the deal. And a lot of what they were arguing was the compounding effect of the stock market, because it just keeps growing. But I can compound real estate as well. When I do a 1031 exchange, and I'm rolling it and increasing the equity position, I will smoke these guys on a return.
I believe it.
That's the beautiful thing about real estate. But I think it really comes down to, what do you want to do? Stock market's great for being passive, but I want to control my own assets. And the leverage too, that's what makes real estate so much better growth, in my opinion.
Well, yeah, I think one of the things that they argue in this as well, and maybe considering it's hard to know the exact methodology in these analyses, but it's like, if you're just comparing buying a home, your primary residence, to the stock market, I actually don't think that's as cut and dry as a lot of people in our industry think it is. There are a lot of instances, if you do the math, where what's actually better is to rent and to buy rental properties and not actually buy your own primary residence. And I think all of us here are probably thinking of this in terms of like tradition, what we all do, buying rental properties. But I think for a lot of Americans, they're comparing, I have $100,000. Should I buy a primary residence or put that in the stock market? And that is actually sort of a more complex question, at least to me.
The one benefit, though, of the owner occupied, and I understand that, because you're going to get steady growth, 3 to 4% typically on appreciation. But you get that tax-free gain that you're not going to get with the stock market. And, talk about a compounding effect, like that owner-occupied resale. We've done that now 5 times in our lives, where we've been able to shelter from $500,000 per house every time we've done it. So that's $2.5 million tax-free, which I can't do in the stock market. And so it really just depends on your strategy, what you're trying to do, and where the growth is. But there is an argument to be said. I mean, that's why I rented in California for so long. It did not make mathematical sense for me to buy.
Yeah, and just for everyone's reference, what James is talking about, there is a part of the tax code in the US that says if you live in a house for 2 out of the last 5 years, if you go to sell it, you can write off the gains up to $500,000. So one of the reasons why owner-occupied strategies are so successful.
Or $250 if you're single.
Oh, thank you.
$250 if you're single, $500 if you're married, but there's actually a bill right now that is looking to raise that, because it hasn't been raised since like 1997, and so it would actually raise to $500,000 for single and $1 million for married.
Whoa!
My wife's gonna kill me, because I told her we're not doing it anymore. But if we get $1 million, it is game on. I'm doing 4 more times. You just got me in trouble, Henry.
Tax-free money. It's pretty sweet.
You seem pretty excited about getting in trouble, James.
$1 million tax-free.
Moving on to our second headline today, which comes from Redfin. It reads, home prices hit another record high, pushing pending sales down 4%. The key points you need to know here are that prices keep rising because spring inventory is lower than usual. There is a sliver of good news for buyers out there, is that mortgage rates have come down a little bit over the course of late April and early May, which has improved affordability just a smidge. But the median U.S. home sale price hit a record $387,000. And just so you guys know, you might hear that number differ from source to source. For some reason, there's not a lot of consistency. This one comes from Redfin, though. But that brings the median monthly housing payment to $2,850 a month, which is whopping. Henry, what are you seeing for inventory? Because I see this all the time. People are saying that it's up a little bit, but somehow prices keep going up and there doesn't seem to be anything on the market. So tell us what the boots on the ground are telling you.
Yeah, and we got to remember that this is going to be very local. Every market's going to be a little bit different. And so when I was reading this article, I actually went and I looked at our inventory levels over the last 2 years, and we have been sitting it's like it was literally a flat line. We're at right about 2,000 homes on the market. And so if you look over the past, like I said, we looked over the past couple of years, it's been staying consistently flat, but values have continued to rise year over year in our market. And to give a point of reference, we would need a supply of about 5,000 homes to satisfy the demand here. So we're staying flat. We're not necessarily seeing it increase or decrease. There's been slight fluctuations month over month here or there, plus seasonality built into that. And so even though people have lower interest rates and we're saying that people are staying in their homes because of there's lower interest rates, I think that there's some truth to that. But when we look at the numbers, we've got the same amount of homes listed month over month, regardless of what pricing is doing and regardless of what people's interest rates are.
Out of curiosity, Henry, you just listed a very cool stat. How do you come up with that number that you need 5,000, homes for sale in terms of inventory to meet demand?
Yeah, so a lot of that is based on pre-pandemic numbers. So if we look pre-pandemic and then going back in time from the pandemic, we had that was about what was on the market. And average days on market at that point was pretty healthy. And so when we say we need about 5,000 homes to satisfy the demand, we have the same amount or if not more demand now than we did back then. But there were 3,000 more homes on the market.
Wow. And I mean, from everything you tell me, demand may have actually gone up in recent years just because how popular an area you live in.
Yep.
So thank you for sharing that. It seems like this is representative of a lot of the popular areas, but I'm always interested in contrasting what's happening with Henry in Arkansas with what's happening with James in Washington, which seems to be a little more, I don't want to say volatile, but it just seems to be like a little more up and down every couple of weeks, James, based on what you're telling us. So what's the most recent news?
It's weird. It's like this rev and break market right now. We saw a huge run up on the median home sale price and in values alone. Speaking of which, our flip off house sold for 10% above what we performed it at. And so we're seeing these like revs going on. In Seattle's market, year over year, it is up 9.6% on median home pricing. And so we've seen this actually jump like 10%, and we were ripping that first 4 months in the market. And then all of a sudden, it's like this buyer fatigue just sits in. And we went from seeing 20, 30 people through houses. Now we're back down to 4 to 5. And it happens in a very, very quick manner. And we're going into the summertime. So we're starting to see things kind of slow down a little bit, but it's a little bit sooner than normal. Usually we're seeing this in June rather than May. What I will say is there is more inventory that sits for a second, but not the good inventory. If it is good housing, priced well with what people need, it sells, and it sells very quickly, and it is still very, very competitive. We just had multiple offers on a couple properties this weekend, and as long as you're around this median home price or that affordable price range of any type of market, whether it's Arkansas or Seattle, the stuff's move. And what we are seeing a little bit of a slowdown on is that top-heavy luxury higher-end pricing. We listed a really cool house for $4.5 million. I thought it would sell in a second. A lot of showings, no offers yet. And so you just got to kind of be patient with the market, but it definitely goes up and down. It's weird. It like revs, and then people get FOMO. They jump in hard, and then they pull back out. And we're seeing that right now. The market's definitely changed the last 2 weeks.
Well, I'm glad to hear you timed the flip-off deal that we're betting Kathy and Henry on together did well. But I also want to just call out something James just mentioned that's important for everyone, that affordability is relative. And, we talk about the national median home price and what's affordable. But obviously what's affordable in Seattle is going to be different than what's affordable in Arkansas or in New York or Kansas or wherever. It's just going to be different. But I do generally hear quite a lot this same pattern, that if you're around the affordability level in your market or below it, that stuff is still really moving. Kathy, curious, do you think there's any hope for a less competitive market in the next couple of months? That says it all. You're just laughing at me.
I mean, on the one hand, what we will probably see is price growth slow down, in the sense that we've been comparing year over year, and year over year, as you know, of all people, that it's very unreliable. And a year ago, sales were low, prices were low. And so we're comparing year over year to that. But as we go into the summer and fall, that's when things kind of picked up last year. And so the year over year comparison isn't going to look as good in terms of price growth. So I think people will be panicking like, oh my gosh, our price is coming down. It's like, no, it's just, you just can't rely on these year over year numbers. So that's one thing. That's not an inventory issue so much, just kind of more of a data point. But in all of the markets that we're in at Real Wealth, which is, obviously Florida, Texas, Indianapolis, it is super tight. We've been able to kind of control that like we have for 20 years, where we work with different groups and builders to set aside inventory for us. So it's kind of like they've got a guaranteed sale. So we always have enough for our members. But, that's build to rent is one way to increase inventory if you need it. And we do that. But in general, like our Texas fund, I mentioned to you guys this before, we were planning on refinancing all the properties and buying more, and we're just not going to be able to get the kind of deals we were getting last year. They're not out there. There's more competition. The prices have gone up. So markets have definitely changed, definitely in North Texas.
All right. Well, thank you for sharing that with us. While you were talking, Kathy, something I've never seen before just happened on this podcast. James took a drink of something that wasn't Rockstar Energy.
Whoa. What was it?
What did you just drink, and are you okay?
It's real estate juice. It's the hydrate. You got to balance the caffeine. You got to intake caffeine, balance it with water or hydration. It gets you on the optimal jacked up playing field.
All right. Well, for those of you who don't listen to this podcast regularly or might be new to the show, James, I think just drinks one kind of liquid. It's just Rockstar Energy. So this is a real novelty for us here. But I digress. Let's move on to our third headline today, which comes from Realtor.com. This is more of an opinion piece, and I think it's really interesting for anyone who's considering selling a home in today's market. That's for flippers or homeowners. The headline is 5 things home sellers can still control even in today's chaotic real estate market. Chaotic is probably a very good word for it. The 5 things, if you haven't read this article, we'll cheat and tell you, are number 1, the price of home. I'm not sure how you control that, but let's talk about that. Number 2, negotiations. Number 3, the timing of the sale. 4th is what repairs are done. And 5th, what agent represents you. Henry, let's start with you. You buy and sell a lot of homes. What do you think of this list of 5 things that you can control?
This is the type of article that needs to be put out there more often. Like, this is an education piece, right? This is what buyers and sellers both need to be seeing. And this is true. So when I was looking through this, first was home price, right? And so, yes, you don't control the price necessarily, but you do control what you list it for, right? Like, what it's going to sell for and what you list it for are 2 different things, right? So if you come in and you list you can list a home for $1, right? And that thing is going to get bid up like crazy, and it's going to sell for what the market is willing to pay for it. Or you can overprice a home because you're shooting for the stars, and that thing will probably sit on the market and you will scare people away. And so what this is saying is you need to price your home realistically. And I still think a lot of home sellers have 2020 and 2021 in their mind still, because it was the golden age for shoot for the moon and see what you get. And people were overpaying for homes. And so what you're seeing is in a market where list price, you need to look at list price to sale price ratio. And so what I went and did was I pulled list price to sale price ratio here and looked at it. And we are consistently sitting right just under 100% list price to sale price ratio. And what we're seeing is that the homes that are listed for realistic prices based on the condition of that home are selling very fast and for every penny that they're asking for. And the homes that are overpriced for the condition of the home are sitting on the market and pushing up days on market. And that's what you want, right? That's like a healthy real estate market. That's what should happen. Typically, if a home's not selling, it's either due to price, condition, or marketing. And so if you look at homes right now that are priced appropriately to the condition, and I think that's the big part, is sometimes people just want to price their home at what they think or feel like it should sell at, and then it sits on the market. But you need to price it according to the condition. So if your condition is bad, your price is lower. If your condition is good, you price at retail price. But that's really what is most important when you're looking at pricing your home to sell.
Well, thank you for explaining that, Henry, because when I first read, hey, sellers can control the price of their home, I thought, wow, I could just name whatever price that I want.
You can. You can.
Yeah, you can do that. To your point, you can do that. It's not going to work for you, but you could try. So thank you for explaining that. James, you obviously are doing this all the time. So can you just give us some tactical advice here? Like, what should a checklist or be for anyone who's flipping a house and selling it, or anyone who's just selling a property? Like, how do you come up with the right answers for these questions? Like, what repairs are done and the timing of the sale? What is the process you go through?
You know, prepping your home for sale, and once you put it to market, is one of the most important things that you want to do when you're delivering this product, right? When you've been renovating a house for 3, 6, 9, 12 months, you don't want to push it to market too soon. And I think what this article talked about had a lot of good points as far as like controlling your pricing, controlling your negotiations, but it was also kind of generic. It's like, well, if you want to sell your house, you can control your price. Well, that's a given. There's other things that we like to do to make sure that buyers know that we're handling with care when we're selling this property, because the better a buyer feels when they walk into your home, the quicker they're going to make the decision. And right now, rates are really high, payments are high, and you want to make sure that people don't create that objection inside your house. So the things that we always do is we do a pre-inspection every time. We do it at the 2-week mark, as we're getting ready with a punch list, and then we do it finalized, and the buyers can see our notes, the time and care that we took on that property addressing the issues at that point. When a buyer pulls up, they're looking for the reason not to buy the house. And if they find that reason, you're going to lose that buyer. Whereas if you can just spend a couple $1,000s more, you can make a huge impact. And so it's more about the product that we're delivering. And then pricing it accordingly and having logic behind it. You know, like when we're selling right now, inventory's low, comps are difficult right now. You have to go back. It's hard to find data points. It's hard to find those comps. And when we're seeing a lot of dated homes selling for big numbers right now, what we like to also do is make a list of all upgrades we did with a dollar amount, so a buyer can really see the value when they purchase that property. For our flip-off house in Kent, we sold that for the highest price in the market. It was $50,000 higher than the last sale, but the last sale had not as many upgrades. And so we had to explain that to the buyer of going, hey, you're getting $100,000 in upgrades for $50,000 more. And that's $100,000 in upgrades for us, not for the end user. And so by explaining and taking the care of explaining what your product is, reducing those objections, you can make people fall in love. And when there's low inventory, that's where they'll pull the trigger fast.
I just want to say that this article is so important. Like Henry said, it's educational. And for all the people who have downplayed the value of a real estate agent because of the recent lawsuits, take a look at this list of things. If you're going to try to sell your house on your own, what in the world are you going to list it for? How do you know what the market is really calling for? If you get that wrong, your house will sit on the market and it will lose value every single day that it sits there, because people freak out when properties sit too long, and then vultures come in and they know how to negotiate, which brings to the next stage. Like, if you don't know how to negotiate with a professional, you need a professional on your side. And negotiation is a huge part of the real estate transaction, whether you're buying and selling. And timing of the sale, like all of these things are so important. And I hope new buyers will understand the importance of having someone represent you. So I loved this article. It hopefully shows that there's more to being an agent than driving a fancy car and having a pretty picture. Really, like, it's so important to get it right.
All right, great advice on selling homes for anyone who's considering it. Let's move on to our fourth headline for today, which comes from Airbnb. The headline reads, "Cracking down on holiday weekend parties with anti-party technology." The point here is that Airbnb has a new anti-party system. So back in 2023, about 67,000 people were blocked from booking entire home listings over these weekends to prevent them from just booking them and using them for the express purposes of parties. This new technology, as they're iterating on it, is basically trying to stop disruptive parties. You know, a lot of neighbors hate when this happens, and they're basically putting restrictions on 1-night and 2-night bookings. And guests who book local reservations will be required to attest that they understand Airbnb bans disruptive parties. Kathy, I know you are now a short-term rental operator. You have been for a while. What do you think of this policy Airbnb is implementing?
I think it's pretty wise. I mean, I don't know if you guys heard the story a few years ago where somebody Airbnb'd their home. It was their home in Malibu, and somebody threw a huge party. They all went out on the deck, and the deck collapsed into the ocean. Nobody was killed, but they certainly could have been. The landlord was actually on the call with the person saying, "You can't have a party," and they just didn't pay attention. We've kind of solved that problem a little bit in LA County, because technically you are supposed to be living in your home in order to rent any of it. I don't think a lot of people actually honor that or pay attention to it, but it's pretty serious. And finally, I'll just say my daughter has grown up, but when she was in college and was in a sorority, the fraternity guys would rent these Airbnbs, and she said there would just be massive parties. The homes would be destroyed. And it was usually, they had a very clear technique of how to do it. It had to be a house that's kind of in the middle of nowhere, and the owners weren't around, and they would verify that. But it's not safe for the kids who are renting these homes. It's obviously not great for the owner. So I think cracking down is good, but it's also, frustrating if you're the Airbnb owner and you'd like to be able to rent your property. You can't. I've seen that. I've had people not be able to rent it. So bottom line, I'm actually for it, because it's a dangerous situation otherwise.
When I read this article, I actually went and chatted with one of the people in our office who actually manages short-term rentals as a side business as well, and said, "Hey, do you think this is valuable? How do you feel about what they've implemented here?" And they actually said it would be incredibly valuable, because they have had two situations where parties did happen at their Airbnbs. One of the parties was a 1-night booking that was booked at the last minute, which is one of the things, hopefully, that this would help prevent. And then the owner was actually screenshotted a social media post for a party flyer that was happening at this Airbnb. and so
oh boy.
he made her aware of that. She then reached out to them and said, "Hey, you can't have a party." They obviously said, "We don't know what you're talking about," right? Drove by and saw that there actually was a party, called the police, had the police go out, and the police couldn't break it up until there was enough people that they could actually see it was a party. And so it took the police a couple of times driving by before they actually did break up this party. And by that time, it was too late. There were damages to furniture, damages to appliances. And Airbnb was difficult to reach out to. They said they tried to reach out to Airbnb, but it was hard to figure out who to talk to. She got bounced around several times because no one could really help her. And then when the guests did leave, they left her a 3-star review, and they would not remove that review. And so it was, it was actually more detrimental to the owner in that situation. And so this is actually something that she thinks would be phenomenal, which is, and I happen to agree, because one of the things that they said they would do was have a place where not only a dedicated line where the owners can reach out to Airbnb, so you have somebody to reach out to, but also a line where the neighbors, if they see something can reach out and report something to Airbnb, plus have response with the police so that the police are aware. So it sounds like they're trying to make the right steps, because these things are a problem. This is clearly happening, and people are hurting properties, and it's the owner of the property who is then having to cover the expenses in the times where the insurance isn't covering it. And then if you get a bad review, it sticks. That's tough, man.
One of the things I say in my listings is that we live on site. Because that will scare kids away.
They're looking for the grotto properties, the ones with big grottos.
Yeah.
The flyer that the owner was sent showed that they were charging a cover charge. So, does that mean, you should get a piece of pie?
Cut them in. I mean, right? If you're going to do it, get them a little piece.
And I think this is a good reminder of all investors need to vet their property manager and the people on their team correctly, right? Because I have had short-term rentals, not many, but I did it myself back in the day, and this was in an area where lots of bachelor parties went. It was aggressive because I remember touring houses as I was looking to buy one, and I went in right after one of these parties, and it was a disaster. But I had zero problems because I was vetting the people correctly. What are you trying to use the property for? And if these things are also happening, you need to talk to your property manager and really put them in check and put their expectations for what is their intention of renting your property, why are they going, and will it be protected? So just make sure you put the right people on your team. It's just like being a landlord for anything. If I put a bad person in my property and I didn't do a background check or find out what's going on or verify past references, I could have issues. And so just because it's short term doesn't mean you should do short term checking. Find out why they're renting it and let them enjoy it, but they can't rage. It's not the time to rage.
All right. Well, those were our headlines for today, but we do have 2 quick updates for you before we get out of here. First, I know everyone has been on the edge of their seat wondering for an update from one of our recent headlines about Red Lobster potentially going bankrupt because of their endless shrimp deal. Well, Red Lobster did, in fact, file for bankruptcy. The Orlando-based seafood chain filed for Chapter 11 bankruptcy last week, citing $1 billion in debt, less than $30 million in cash on hand, and they're shutting down 93 restaurants, but they do have a plan to stay afloat. Hopefully, everyone who is working at those 93 restaurants does find another job quickly.
I guess endless shrimp does indeed have an end.
Thank you, Henry. Well, actually, when I was reading up about this, I saw a follow-up article that said that now Buffalo Wild Wings didn't learn their lesson. Now they're doing an all-you-can-eat wings. And wow. I am not interested personally in all-you-can-eat shrimp, but all-you-can-eat wings, I could make that a bad economic proposition for them. I feel very confident I can take them for some money. So maybe next time in the U.S. we're going to do that. The second update is, again, to check out my new webinar, which is biggerpockets.com/newbie webinar. And the code, if you want 20% off pro, is newmarket24. Again, it is a great webinar teaching you, if you are new to the real estate game, how to get in even in this type of market. James, Kathy, Henry, thank you guys for joining us. We'll see you guys all for another episode of On the Market very soon. On the Market was created by me, Dave Meyer, and Kaylin Bennett. The show is produced by Kaylin Bennett with editing by Exodus Media. Copywriting is by Calico Content, and we want to extend a big thank you to everyone at Bigger Pockets for making this show possible.